my 46 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Quick announcement before we get even going. I'll re-mention it and make sure everybody hears it when you get online. But I am going to take off the last 2 weeks of the year just to focus on the annual report and some metrics and things that I'm going to be launching early next year. I'm going to need that time. In tonight's video, we're going to talk about CPI. We're going to talk about labor markets and other things that are going on. Let's get into tonight's video. Hey, welcome everyone. We'll spend just a couple minutes as the room starts to get filled in. Just want to make sure everybody knows we're continuing to have the indicators for 447 for the rest of the year, possibly into the first week, but you need to get on that. You can go to kendallreport.com/indicators24 to find out more about that offer. Also, make sure you get signed up for the Substack. I'm going, as I mentioned, I'm going to be taking off the next 2 weeks. I decided to go ahead and take that off. Markets are not boring necessarily, but there's so much to get ready for 26 with the new Discord and all of the elements that I'm going to be bringing out. So I'm going to be focusing in on getting all that stuff ready and launching and starting 26 on a nice solid footing. So let's go ahead and let's talk about the other thing that we'll do tonight. We're going to just go through the typical setup that I do, go through the markets. We'll talk about where we are. I've already run the data sheet, so I'll show you that as well. So markets continue to be under a bit of pressure. I know it feels like a big deal, 1%, but we came down right to some of the levels, and I'll go through the details when I go through the markets here, is we came right down to the support levels down at that 10-week moving average, 40-day, 10-week moving average on the S&P we're sitting right there. And in fact, if you would have bought that when we were a little bit below that, you would have done already be a little bit ahead of the game. But I guess what I'm seeing right now, we've got CPI coming out tomorrow. I don't have a lot of confidence in these metrics that we're seeing come out right now after seeing these employment numbers and then just some of the gibberish that we're seeing behind the scenes. It's like we don't have a Fed chairman right now. Powell's basically a lame duck, and no one really cares what anybody says. I think Waller and somebody else are talking tomorrow, but I don't think anyone cares. So they're out running their mouth as usual, trying to gaslight us. And as I just continue to reflect on how good things were when we didn't have any government metrics coming out, how well the markets traded, and we were focusing on earnings, which is what the stock market is about, right? Even though we're looking in the rearview mirror, but we're just not. It just doesn't feel right. I don't know if it's just you or if you people feel the same way, but maybe it's because I had so much time off and I'm trying to get back in. But even while I was I'm still writing the daily newsletter, at least feeling like I was still engaged. But there's just what we're seeing right now is the markets are as indecisive and as anything. One day it's the AI trade is off and it's a bubble. The next day it's back on. And what is that? That's just a sideways trading range, and that's what the databases are telling us. And we'll go through the database in a minute. It backed off pretty good on the about 6.5% yesterday on the daily models, and nothing catastrophic, but not necessarily good either. As far as I think all the markets were stretched pretty far to the extreme. Like on crude oil and gasoline, we kind of just moved all the meters down to the extreme, and now we're starting to see a little bit of recovery. And and our friends over in the Bitcoin world are not feeling very good yet. There's no continuity there at all. And I was talking to an old friend today, and I made a comment that Bitcoin's starting to feel, I don't know, not feeling very good to me. Like the community's starting to break down. It's one of these places where this is where the market could really lose itself, because we're sitting right here on the bridge, right? So you folks will hate this analogy, but it's feeling a lot like Beanie Babies. I remember the Beanie Baby craze. I've never seen the noise in the market, and the Eric Trump sitting on every show, and Saylor and these guys, and it's going to go up, double in 6 weeks. And they're just, I mean, seriously. I mean, why would anyone care what Michael Saylor thinks about what the market's going to do? Because he owns a bunch and he needs your help. There's no help coming. I really think that I'm going to throw a little bit of a conspiracy out there, in that I think that the shorts are they want to try to break Saylor. And I've made the comment several times before that if they do break him and there's some kind of capitulation or some selling that happens, that's when you want to buy. And you can buy all the Bitcoin you want once Saylor and Tommy and all these people. But I mean, you think about it. I see, Eric Trump. I just saw a couple clips today of him telling you how much it's going to go up, and they got the government in, they got daddies in there, putting out Bitcoin reserve. And I keep arguing, you don't want these people around the Bitcoin. That's not what it was supposed to be about. Decentralized. Well, it's centralized now. So anyway, I just kind of hung up on this. It's bothering me, and people that watch this will go, "Oh, it's an old boomer." I'm not questioning. I am questioning, but I'm just saying I've never seen anything in my life like this, other than Beanie Babies. That's the only craze I've ever seen, that people thought that this was a thing. My ex-wife many years ago was a Beanie Baby on eBay, selling Beanie Baby, and yeah, it's crazy. Anyway, and the reason why I'm comparing it to that is this relentless, like, no, it's real. It's real. This is like the most amazing thing. And I don't know, maybe it will be. I hope I live long enough to see whatever it is, good, bad, or ugly. I don't really have much in there. I've owned Bitcoin. I don't have any of it right now. So I feel sorry for a lot of people bought over 100,000, especially the ETF people. So, all right, I'm done. I keep getting on this. I keep watching this, and I go on X, and I just keep seeing all of these voices, and they're screaming. And if somebody says something good, to all the influencers, look what he said. He said it live on TV. Like, so what? Anyway, so I guess if you say it, I guess we're used to, if people say something long enough, that somehow it becomes true. I'm not sure. All right, I'm done with that. So like I said, I'm going to take off. I'll do one more show tomorrow night, and then we'll just be off Christmas week and coming into next year. And I'm going to be busting my butt in the background trying to get everything ready to be able to get the education on the indicators and that whole channel going on Discord, and hopefully that'll work out, that's the right venue. So we'll get it all figured out. Excuse me. So, All right, so let's go ahead and get into the database and see. Let me double check before we get over there, make sure we've got everything run. Okay, looks like that's run. Couple more clicks, should be able to move forward. Yep, definitely run. Okay, let's go ahead and get into that. So we're down to 31%, so a little more deterioration. We were above 42% last week. We've been getting some selling, not a lot today, but almost about 1,000 sells versus 200 and change on the buy side. We're at 31.99, 32%. The next metric to watch for is going to be 28%. And if we get below 28, then we're into 22 to 18%, which is basically a full liquidation on a short-term basis. And what that means doesn't mean a big rollover. It just means that we're completely out of any upward or downward pressure at that stage. It's neutral. And at that phase, then the markets are just going to continue to trade within the ranges that we've been talking about. There's still, 8? Let me check something here. Yeah, we did get down at the very bottom. Let me get off screen so you can see it. We got capital goods as a sell signal. It had about a 0.5% gain, only long for 7 days, and it's out of there. So we're already starting to see sector rotation. The sectors are usually more stable because they're baskets of stocks. So they're like an ETF, if you will. They usually have better stability because they have more, than just looking at one symbol, whether it's in or out. It's a basket or an index. So, there's starting to see some slippage there as well. So, hey, it's year end. There's going to be a lot of cross currents. I think this is always a tough time to trade, and this is why I always take everything off and take off that last couple of weeks. I think it's going to be best for me anyway to focus on getting the business ready to go and for everything to get going. So make sure, once again, get the indicators, kendallreport.com/indicators24, and you can find out a little bit more once you get there. Okay, so let's go ahead and move over to the indexes. We'll take a look at, let me grab, unfortunately, this is Claude that's running all the code and everything. Let's blow this up just so we can get a better feel. So this is the same configuration that we were looking at last night when we were looking at everything. Hang on a second, I lost my control panel here. Yeah, so this is the same thing that we were looking at last night. Is we're getting the AI is picking up that we're in a consolidation phase, and PPM1 is neutral, but it's the first derivative is trying to turn positive here, and that's somewhat encouraging. And we look at what the models are saying. There's just a minimal game. I think we start to trade back up. We still have some high targets up at 69.21, Do we get a Santa Claus rally? That probably won't happen until next week anyway. That's usually kind of the last week of the year. But the consolidation is really what we're getting here. And we're at the bottom end. I'll show you here in the technicals here in a minute. But we're in the bottom end of this range. But it's interesting because we have PPM 1 is still negative, but it's above minus 0.15, which means it's neutral. You can see the N here. So all of these metrics, we're neutral across the board on all of the PPMs. And then once we start to look at like the second derivatives, we've got some positive numbers starting to flow out. And this is one of my favorite areas of this sheet, is that we've got the R1 6805. That is one of the targets, and that's a pretty good rally from here. Sorry, I'm looking at my December future, so when I bring up the other sheet, but 6805 would be the target S1. R1 is the two targets. 6767 is that target. So let's go ahead and just move back over here. As we're looking at right now 6793. So that R1's not that far away. I think we stay probably R1. Maybe we start to move towards R2. I think we recover from here. And this is what I was talking about last night. It sounds, like I said, it seems like it's somewhat negative, even though we've been trading down. We're right down to this extremes of this data, and you get this V here. You're just working this pattern here. And somebody would go, oh, look, it's a head and shoulders bottom. There cannot just talk about the oxymoron. You can't have a head and shoulders bottom at a top. And there is no such thing as a continuation head and shoulders. If anything comes out of this, it's more of a distribution pattern, and we could work further down into this wedge between the 200 and these moving averages. I pointed out we've got a little more downslope than we had last night, where the moving averages are trying to turn down just a little bit, but nothing drastic. My guess is if we close positive today on Thursday, that Friday we get the market grid. Let me just move this up. That this market grid here turns up. So these dark gold lines will turn up, and then we get a little bit of a move to the upside that probably starts to move up into Christmas and beyond, and into the final week, where we just are staying in this final kind of configuration. All of the algos are still a little bit of bias to the positive here, very slight, not into trend mode, not into anything that is material from the standpoint of what's going on with the trend, but it isn't a collapsing type pattern that's happening here. And so it's really just sideways, more this range bound. I talked about this last night. We might be able to get down to that 10-week moving average. So let's just go to the 10-week real quick here. And you can see this is right where the cursor is. It just went slightly below it. And now we're trying to rebound. You can see the red dots are forecasting just to stay above this 10-week moving average. And just so you know, right here, these dots, that's like 3 or 4 weeks from now. This is into January. But the angle of attack are still not vertical, but very, very positive angle of attack. And when we look at the PPMs on this level, we're still into trend mode on the intermediate. So that's why I'm sticking with, we're not likely to see any kind of big move, to the downside when you have a 0.26 and you're trading right on into this, the 10 and 21 period moving averages. This is not configuration that you're likely just to roll over. Now, Trump's got his blockade up at Venezuela. Does something unexpected happen when you got a bunch of heavy gear with people with their fingers on the trigger, literally? Sure, anything could go wrong. So we have some pretty good geopolitical elements out there at the moment. So yeah, buy the dip. I just saw somebody make that comment. So let's go ahead and we'll do a little bit of a top down. I should be able to get through this pretty quick tonight. The angle of attack is a little shallower. Always is the case. What we get is the momentum is even greater than what it is on the S&P, on the NASDAQ. The beta is just higher, or when it's rolling over, it's a little bit ahead. The one thing that has shown up on this weekly are these downward targets, and these Fibonacci targets are for 20,600 is the minimum. It's going to be very difficult with these kind of 0.29, these type of momentum readings here on the PPMs. It's going to be very difficult for you to get through those numbers and start to roll down to get to this 40, which is got momentum building in the 40. So like I said, this is not a typical configuration where you're going to get a big rollover. You're seeing what's being forecasted if we go out several 6-8 weeks. The forecast right now is for momentum to bleed off, but it's still positive momentum that says we're still in this uptrend on an intermediate basis. So we go over to daily. Now this is interesting because I'm seeing this the first time with you. We got new Fibonacci targets here on the downside. 23, 376, 22, 423, 21, 4. So that's basically telling us we're going to test the 200-day. That would be equal, I'm going to go back to the weekly, similar equal to the that would be coming down to this 40-week moving average would be similar. And there are live targets all the way down here to 17,000 on the NASDAQ. The only reason why that's not concerning me is we're not getting confirmation from the PPMs. But we've got to watch this situation fairly close. But there's very strong momentum on I'm back on a weekly here, right at that 21-week moving average. So back to the daily real quick on the shorter term analysis. It's a little bit more vulnerable. The pivot is right here at the 24,400. So that's your pivot point. And we're 24,900. So we're a little bit above. Like I said, I think if we close higher today, watch, those of you who have the indicators, watch for the market grid to turn up. And if it turns up, then we're probably going to get a bit of a move back up towards the 25,200 or something like that, just from the standpoint of how the configuration is. Even though we've got a downtrend in the daily, that's where the momentum should stall around there. So just look for the next couple of days being material. Watch what happens with the, now you can get this off the Substack, so you can watch what happens with the, as far as what the order flow is going to be, what the ratios, and whether we're getting a turnaround in the database. And if it stalls here in this mid 30s and starts to turn back up back above 42%. Don't have a lot of expectations for this time of year and a typical slowdown from everything. Yeah, so that's the other thing to watch for. I'll be up tomorrow night. But the other thing to watch for is if we do turn up and the calculation, it stops calculating the downward Fibonacci targets, then that would tell us that we're looking at that this is an island projection, which it usually is one, maybe two. If you go 3 days in a row with this projection, then it becomes a little more valid that at least we're going to reach down toward the, fib target 1. The other thing to do here is just the way it's, if you come over here where that target is, the 200-day moving average will be there around January 21st is what it's being forecasted to be at. So we could spend the next 3 weeks drifting lower and then end up bouncing off the 200. The 200, one other thing to point out here, let me go off screen so I don't. Wonderful, my device is screwing up again. Yeah, so one of the other things to look at here is notice where my cursor is at the bottom, where we're seeing the upward slope to the ppm 200. That upward slope, this is one of the better indicators. It broke over the first and second derivatives, and it looks like it's going to continue to move higher. And it's right down here. You'll see where my cursor is. You can see this upward slope to the 200. So that's just showing you that's what's being illustrated here at this angle of attack. So we should converge over here somewhere, and that would be mid to early January. Let's go ahead and just keep moving down the road here. Let's go to the gold. Got a bit of a burst again. So even though it's down a little bit tonight, this forward projection, this is what I was talking about last night. We're going to continue along this upward line. Silver also got another pretty good jump. It's funny because Saylor and Tommy keep telling us that Bitcoin's going to do way better than silver and gold, and the opposite's happening. I don't know if they think we're stupid or we can't see or what, but the opposite of what they're saying is the case is what's happening. They're saying it's going to be different, but it's not. So this trend here, this is the daily. Weekly trends are even stronger here on. Let me just change this angle a little bit. But you can see, I've talked about this. This is way out into November, basically a year from now, and the projections are for the 10-week moving average to be 5,300. So that would mean gold would be much different. We're gonna do Bitcoin next. Bitcoin's the opposite of what. So if you want to believe Saylor and the guys, then you can, but what they're telling you is not what's happening. They're telling you what their hope happened, not what is happening. The opposite's being forecast in both markets here. So let's just go ahead and go to Bitcoin. Look at Bitcoin. They're telling you that it's going to go straight up. Meanwhile, gold's being forecast. If we went back almost to, Yeah, if we went back a year ago, I told you we were going to be forecasting like 41, 4,200 on gold. We've done that, right? We printed almost 44 at one stage. And this is what, if we go out to 27, the moving averages right now on Bitcoin are suggesting we'll be at 58,000, where gold is projecting we're going to be 53, 54,000. So it's amazing, like I said, how loud the noise is with Sailor. I mean, they're on every show. They got to be, and they're getting, getting fried, just screaming to tell everybody to buy what goes down. But I do think there's a play going on. Some big money is selling Bitcoin. And listen, it's only a 2.2 trillion. I say only a $2 trillion market. It's not the U.S. dollar. It's would be a substantial stock. Don't get me wrong, but especially some guy that buys $1 billion of a $2 trillion capitalization market isn't going to affect anything. But look at the contrast. This is Bitcoin. This is gold. Gold. Bitcoin. So anyway, I kind of rest my story on that. Okay, folks, let's see what you're talking about. But it is kind of interesting when you look at when you take the rose-colored glasses off. Yeah, I'm not sure. Okay. Bitcoin and crypto will outperform if we continue to cut. It has nothing to do with interest rates. I mean, zero. That is that Michael? Did you show up on the stream? No, that stuff doesn't have anything to do with any. Interest rates are going to come down a bit, but they're still in contacts with trying to get the yield curve in place. It has nothing to do with being dovish or stimulative or any of that stuff. I don't think the unemployment, I mentioned this last night, that the things that are going on with labor right now is going to be blamed, I think, ultimately for AI and efficiency and productivity and all that stuff. And it may be somewhat right. And what we're doing is we're trying to normalize the labor market. It's not really that weak. You have roughly, we'll just call it $4 to $6 trillion of capex going to happen in the next 14 months. So, none of that matters. It's the reality is no one knows what causes. It's obvious that hype doesn't cause Bitcoin to go up, because I've never seen anything hyped more than it is. So that's not going to affect it. But this is the general belief. No offense, I'm taking the other side because it's my nature. But this is the general belief of every Bitcoiner out there. Exactly what this person just said. The Fed's going to cut. It's not QE or like I said, but yeah. So IWM will only. Bob's been telling you this for 2 years, and let me see if I can bring up it. And it's very frustrating because I have something called Stream Deck, and it keeps erroring out. I think there's an update out there I need to do. Okay. Yeah, so let me bring that up here for you. So this is what IWM looks like. It's not about to break out at all. It's all it. Let me. This is weekly. It's just it's the same piece of junk it's been. What's in IWM? What are these companies? Mostly zombie companies. They need lower rates, but they need a steepening yield curve. There's a substantial amount of community banks and those type of things in IWM, and we got Fibonacci targets down as well. This is not. Let me bring this up. These are not what a market looks like when it's about to break out. Not. We've been waffling. If we go all the way back, I've been saying the same thing in 21, and last year everybody was going to break out in December last year. Now it's going to break out this year. We're getting the opposite signals, and at least nothing else. There's probably a mini correction, but there's no reason to buy them. Just lower rates does without the steepening yield curve. Without the steepening yield curve, this sector. This is why, but by the way, it's been lagging for 6 to 8 years. Now, rates were zero. Okay, it couldn't rally. So it's not about the low interest rates, and this is a typical narrative that's out there right now. These are, you have to be, you guys are on a YouTube channel listening to me, but I've always said be careful what you listen to. That is mainstream thought that you're putting out there. That's what a lot of people believe is going to happen because they hear it so much they think it's true. I've been saying this for a while. When you have a 75 to 100 basis point spread between the short end, the Fed funds overnight rates to the 1 year, not the 2 year, that's another retail number. No banker looks at the 2 year. So I've dealt with institutions for many, many years. What you're interested in is that spread between overnight money and the 10 year, because that's where most of the mortgages are being done. So when you have that kind of spread, you have 100 basis. I've seen it as high as 375 many years ago, back in the 80s. I realize it was the 80s, but we also had interest rates that were 14%. Not, they weren't. I got a mortgage at 13 and 3/4% on a house in California, in the Bay Area, and I thought I got a good rate. I did relative, since they were 18, 19%. A year and a half, 2 years before that. But what I'm saying here is that those spreads are so not important. They are essential to get this market to work and for these stocks to come alive. All they did was lag behind 6 months to get to, I gotta come back. Sorry, this is a pain in the butt. I've got to flip around to get there, but let's do this because I think this is a good point. I kind of like doing these Q&As. So what happens here is, we'll just use the E-minis real quick. If you look, all the IWM has been able to do is get back to its previous high here. We're 20% above on the S&P, the NASDAQ. Everything has went well beyond that. So all the IWM does is went back to its old high again. Now it's testing. Now we're getting metrics that are telling us that it's going to go the other way. And unless the Fed in January, they're going to have to lower the rates, I think they should do 50 basis points and just get it over with. They should have done it probably a year ago. And then you would have had the IWM maybe leading the way. And the old theory of the way the markets, Tom Lee told you 2 years ago it was going to quadruple, and it managed to make a new high and then fall way back, all the way back to 200. Everything did in April. And now the IWM is just back to where it was before, pressing major resistance. But great question. I'm really not, I am taking the other side of it, but that is mainstream thought there. Let me look, there's a, yeah, so this will be good, Bo. I'm going to answer your question here. The PPMs, evaluating PPMs. The PPMs need to be evaluated in their sequence, 1, 2, 3, and the 200. So you could have the PPM 2 and an uptrend, PPM 1 rolling over. Typically, when they cross their first, second derivatives, they're just telling you they're going to test that value, and then you have to go to the larger trend analysis of what's going on. So I know you have wave tech, so if you have a long position on a weekly and the PPM 1 is rolling over and crossing, but PPM 2 is well positive and above its first and second derivatives. Number one, you're not going to get a sell signal until at least that breaks down and the position of the markets relative to the moving averages are breaking down. So what's happening is I've always operated on a fact that within every trend, there's 3 different trend levels that unfold. That's why there's PPM 1, 2, and 3. And a longer term trend is that 200 that you can identify through that PPM 200. So I will be going through a lot of these nuances when we get the Discord going here. Yeah, and Ted's going, he had a 12% mortgage in the 80s. Absolutely. That was a good mortgage, by the way, Ted. I paid 13 and a quarter, 1984, I think it was, when I got that mortgage. Yeah, we do need another government shutdown, somebody just said. Well, I can't imagine, I will take a quick look at Rivian. I can't imagine that the stock's any better than their cars, but let's take a look. Let me see if I can find it. Yeah, this here, this chart here. Let me bring this up 1 second here. This pretty much tells the story. This reflects their customer service, and here you go. There's where it came public, and it just waffling along the bottom. So let's see if we can get some. So it's moving up a little bit off the basement. Yeah, a couple of things. No one wants electric cars. Maybe Tesla, but these things are just terrible. So on a weekly, I don't have enough to get the algos. I'd have to change too many metrics. Let's just go quick daily here. RTX sell signal here. We got some objectives up to 22. Look at all the algos, they're just fading here. Probably going to head back to probably stay 15, we'll call it 1550, maybe up to 1880 is a range. There's a slight upward slope here, but you can look on the back side here. All these algos are just, it's like watching the battery go down. Sorry, not very friendly to electric cars. Yeah, good, Ted. I'm glad you get out. I mean, I'm not saying there's not trades here. Just as as a company, it's got to be one of the worst out there. Okay. We used to have this saying on the trading floor: don't hang around bad stocks. There's too many good ones, especially stocks with problems. You know, no one needs them. They're like ex-wives. Who needs them? Okay, so somebody wanted Microsoft. Let's see here. I'll do Microsoft, and then we'll. I guess we can keep going. I'll bring it up here. Just give me a second. I can't push a button and bring it up now. I've got to. Yeah. So Microsoft's on pretty major support here. That might argue, here we go. That might argue as well. This is the daily, sitting right on the 200-day, probably the 40-week. Let me flop over to the weekly. Yeah, right on the 40-week upward slope. So we're in that mode that I haven't talked about these formations, but hang on. Things are going all over the place here. I'll have to draw this in. I can't zoom out and do what I want to do. So. Yeah, so there's a 10-period moving average that's coming through right here. And then you got the 40 coming up here. So I'm going to argue that you probably trade within that wedge. So the value of the 10, I'm on a weekly, the 10-week moving average, and you stay above the rising 40, and you get in there. And it looks like it's possible that we get into maybe into February, March, that maybe you can decide to break out. But even then, it's kind of mixed. I think the markets could be sideways into that first quarter. I don't think there's some rocket ship going to happen in the beginning of the year. I don't think there's a big decline coming, but I also don't see, I see more consolidation. I think it's going all the way back to October when we started this pattern that we're in right now. We're just going to continue to work within that pattern right from that standpoint. Are we heading into deflation, recession? No way. And here's why. Hang on. It's very clunky when I have to move my mouse back and forth instead of push a button to change. So I apologize. Yeah, no recession coming. I think we're seeing an oil glut, but it's by design. The Saudi, we'll call it OPEC Plus, has cranked up their production. The U.S. is pumping as much as they can pump. Cheaper oil is going to benefit the everything, transportation, individuals, the economy in general. All that's going to be the case. And you've got trillions of dollars of CapEx coming. I mean, you've got too much cash flow coming. Listen, we're at a stage where you can't afford to have a recession with the debt structure and everything where we sit at the moment. And why do you think Trump ran around getting all these deals? If half of the deals that were promised come, it's going to be very difficult to have any meaningful correction from that standpoint. I had a conversation a little bit over a week ago with an old buddy, and he's a market cycle guy, and I get it. I was too for many years, but I don't think that in the environment we're in right now, if we tried to let things, the typical market cycle where you're trying to get people, trying to get the recession or the economy to cool off, go through this normal process, eliminate the weak and all that. You just blow up the whole thing. There's just kind of a rotation. It's like there's a different type of entrepreneur out there as well. I think a lot of folks have watched even, guys that have succeeded. You got Musk, but you get a lot of guys that have just pressed things right to the edge and push all chips in and get the company to work. You even blow up big or you make it big. There's no in between. There's no a little bit of stress in a company. They even completely blow or they go up. And that's it's kind of an on-off switch on businesses, the way I see it anyway. And so I don't think there's any recession. There could be maybe if innovation kicks in, but we're ways away. So I'll finish on this note here, is where you're looking at the, folks are talking about, where we are on the economy. If you have all this CapEx coming in, you're in the infrastructure build-out phase of the CapEx. After that phase is the ROI, or the return on the investment and all of the infrastructure that was built. I saw one of of course, Bernie Sanders, right? I saw this little clip and he's telling everybody, that, they want to eliminate and get all the robots and work through, basically have the robots and they'll make all the money and people will just start. Well, Bernie is in his 80s, I get it. But the problem with what we're looking at, if long beyond me, is when we get into, right now, the millennials are the largest demographic group. And 30 to 40 years from now, they're going to all be retiring because they're 40s now. So they'll be 70s. And all of that workforce is going to roll over. Right after the millennials, the next demographic is the Zs. And they are the smallest demographic of any, and this is worldwide, of any generation ever. So you go from I'm a boomer. We were the big dogs. Millennials are now the biggest, and you go straight off a cliff to the smallest, below the lowest of anything that's ever existed in modern times in the last, so you're going to have nobody. You're going to be, there's not going to be anybody to do work. So you're going to need the robots. You're going to need the automation. That's how society will work. And the generation, the alphas below that, is even worse. And they're not procreating, except for third world countries. India is the only country on the planet that's actually growing right now. China's going to lose 400 million people in the next 30, 40 years. Same scenario with China, only a much bigger number. So, world's going to change, already has changed, but the millennials will be the final material group. So you're going to need the robots. I always joke, and I'm not joking, the day I can have an Optimus robot, I will, because I think that's going to be the survival, especially of older people like me that are going to need help. Do you want to live in some assisted living care with people that don't even like you and they don't want to do what they're doing? You'll just have a robot in your house doing this stuff. Not just doing your laundry. They'll be able to do surgeries and medical procedures. Who knows what all they're going to be able to do. So when you see a guy like Bernie Sanders, because it's the oligarchy, I wish I could do accents, but I mean, that's his whole scenario, that they just want you all dead. They want the money and they don't want any people to survive. And that's not what they want. Not that they're not making the lion's share, but it's a demographic issue. And it's not politically motivating for guys like Sanders or anybody, any of the politicians. But that's the reality of what's going on. Okay, folks. Well, listen. I'll be back tomorrow night, and we'll do one more. We'll call it quits for the year. I'm still going to write the newsletter throughout this time, so that's the good news. I'm going to be working on the annual report. I'm going to be working on some of the new educational stuff on Discord, and we're going to get really engaged. And I have a preliminary plan. I'm not sure when it's going to happen, but sometime probably spring next year, I'm planning on doing a master class. I'm planning on going to London, Frankfurt, probably Milan or Lugano, and Dubai, and probably about a 6-week tour next year. So I'm hoping I can put all that together. I want to go out, and haven't been able to travel for a while because of a family issue, and I want to go out. So and it's also about putting something together, and I'm hoping to get everything recorded and documented and be like a concert tour where my presentation in London was perfect on this, and we'll grab pieces from all these presentations and then put a video series, and it's about my legacy. I just went through a death in the family, and being a caregiver for the person that I lost, my wife, and you learn an awful lot about life and what's real and what matters when you go through something like this. It was a 2-year ordeal. That's why I've been so spotty on YouTube, because I wasn't able to even function it. The last 3 months was just horrific. But, I want to go out and do these things because I think I have some really good things and techniques and things that I've never really articulated well. So I'm going to be working on putting all this stuff together. So I will definitely be going from there. With somebody's throwing out Fleetwood Mac, Hypnotized. Let's see, final thing. Let me just see if there's anything out there that's pending. Yeah, Marty, I know it's got all kinds of better qualities. Listen, I'm not saying that blockchain, I'm just saying what we're seeing right now in Bitcoin is hyperbole. It is hype. It is people that are losing billions of dollars telling you that you should lose billions of dollars too. Tom Lee's lost, $34 billion, and he's acting like, and I hate he does this little ticking with his mouth when he's talking. Man. But all I'm saying is, I get it. I've heard it all. It's impossible not to hear it right now. But it is, So Trump's address is starting. Okay, I'll have to tune in. Nothing's happening so far. We're pretty stable. I want to get that tuned in. So why don't we all go watch that? I'll see you guys tomorrow. And, listen, these are, the opinions are mine. And I've seen a lot of markets, and my problem, the Bitcoin thing is just driving me crazy because I've never seen so many people think the same thing, that they're all going to be right. If it works that way, man, it's time for me to move on. I've never seen that much of a consensus trade be a good thing. That's all I'll say. I'll leave it at that. All right, folks, have a good evening. We'll talk to you real soon, like tomorrow, same time.